All right, let's dive in. A really big rule change for government-backed home loans is right around the corner. So if you're even thinking about buying a house, this could directly affect how much you can actually afford. We're going to break down exactly what you need to know. If you're out there looking for a home, you already know that qualifying for the loan, it can be the most stressful part of the whole thing, right? You're trying to figure out what you can afford, what the bank thinks you can afford, and how all those numbers are supposed to magically line up. Well, here's the deal. For one of the biggest government-backed loan programs out there, a super critical rule is getting a major update. And it's something you absolutely have to be aware of if you're planning to apply anytime soon, because this change could literally alter how much house you qualify for. So, what is this big change? Well, it all boils down to a new guideline that's focused on one single number. But first, we've got to get on the same page with a crucial acronym, PITI, or PITI. It stands for Principal, Interest, Taxes, and Insurance. The easiest way to think about this, it's your total all-in monthly housing payment. It's the single number that covers everything each month. And here is the number at the heart of this entire update, 29%. Under the new rules, this is the new benchmark, the new gold standard that lenders are going to use to figure out affordability. So let's see how it actually works. Here's the most important part. With this new rule, your total monthly housing payment, that PITI we just talked about, it cannot be more than 29% of your gross monthly income. That's a huge deal, and it's all designed to make sure homeownership stays affordable. Okay, now I know seeing that 29% number might make some of you a little nervous, especially with how the market is today. But hang on, it's not necessarily a hard stop. Let's talk about how you might be able to qualify for a little more. So, the big question is, what happens if your numbers put you over that 29% mark? Are you just automatically out of the running? Well, the short answer is not necessarily. Thankfully, the new guidelines have some flexibility built right in. You basically have two main ways to get approved for a higher ratio. The first is getting an automated accept from the government's underwriting system, which is called GUS. You can just think of it as a smart computer program that looks at your whole financial picture. The second path is to get what's called a manual ratio waiver, which means you meet a few very specific requirements. Now, to get that manual waiver, you have to check 3 boxes. First, your PITI can be a bit higher, up to a maximum of 32%. Second, and this is important, everyone on the loan has to have a credit score of at least 680. And third, you need to show what they call a compensating factor. That's just proof of something positive, like having a big chunk of cash in reserves or a really strong history of saving money. All right, so now that we know the what, the next critical question is when? When does all of this actually start? Okay, get ready to circle this on your calendar, November 4th, 2025. It's a big day. Any application before that date, you're still under the old rules. But on that date, bam, the new 29% guideline officially kicks in for all new applications from that point forward. So let's get specific. Who does this really affect? Well, you'll be under this new guideline if you haven't gotten what's called a conditional commitment from your lender before November 4th. Think of a conditional commitment as the lender's official way of saying, hey, your loan's good to go as long as you meet these last few conditions. And here's a key detail. Even if you have one, if your application has to be resubmitted for any reason on or after that date, you'll fall under the new 29% rule. Okay, let's boil all this down and talk about what this really means for you and your own situation. All right, let's do a quick recap based on where you are in the process. If your credit score is over 680, don't forget that 32% waiver path could be your ticket. If you're planning to apply after November 4th, you just need to plan around the new 29% guideline. And if you're already in the middle of an application, your number one job right now is to check with your lender about the status of your conditional commitment. Look, navigating the whole home loan process can feel really complex, but honestly, understanding the rules like this puts you in the driver's seat. You now know the new guideline, you know the exceptions, and you know the deadline. So the only question left is, what's your next step going to be?